Okay. Mm-hmm.
Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. And if you're a first-time listener, we are always talking about the financial markets. We talk about the stock market, the options market, futures, Forex, how to make smart investing decisions within those, whether you're in your working years or during retirement years. And that would be protecting your 401k. I mean, imagine being able to protect what you've earned and worked so hard for all your life. And we have investing class tickets that we just gave away some seats to at our local academies here. It's a physical class to learn how the markets function, how to identify supply and demand, what that looks like in the price chart, which is where you make your financial decisions. You can text the word investing to the number 210-210 for 2 seats for this class. That's text investing to the number 210-210 for 2 seats for a free investing class. It's a new year coming up. Let's make sure we get that new year started off right. And Al, as I mentioned in that last segment, I started off the show with a Christmas joke, and I have another one for you.
Oh boy, here we go.
What did the gingerbread man put on his bed?
You got me again.
A cookie sheet.
Oh,
You like that one, huh?
I feel so dumb.
Well, hey, but you look smart today. You're a smart fellow. But Al, so we in the last segment, we kind of alluded to in the markets the turning points.
Right.
As far as where you buy and sell in the markets. And that's actually where you find that lowest risk, highest reward, highest probability entry points in the financial markets, whether you're trading stocks, options, futures, or Forex. Now, the public, which is we call it the retail investor, typically buys with no reason, no rhyme or reason, just I buy and I hope it goes up. Well, there's opportunities for both directions. As I kicked off the show here, we have several stocks just getting hammered on the year, and with a recession potentially happening, potentially here, they could potentially keep going down. So now we need strategies to continue this downtrend. But if our listeners don't know what that is, it's called shorting. I want you to explain just real top line what shorting is, how the strategies to profit in down markets, so our listeners understand, hey, these markets are always great because if it's moving, it's a good thing.
Yeah, I think what's happened here recently is people have kind of fallen into what I call that complacency emotional state where they just look at what's happened in the past. And what's happened in the past is that every time the market looked like it was in a little bit of trouble, the Fed would come in and save it. And people assume that's going to continue and that the only direction the market is going to go is up. And a lot of people really believe that that is the situation. Now we're realizing in the year 2020 that that is not always what's going to happen. There are a lot of people, a lot of the younger investors that have never really been in a down market until this year. And it's a kind of a slap in the face kind of feeling when you look at a portfolio that has been going up and all of a sudden it's going the opposite direction. And does that have to happen? No, it doesn't. There are ways. You mentioned protection before. And I said last week, I'll say again, the most important thing is learning how to not lose what you have. Before you even think about making a profit, learn how to not lose.
So how do you profit in down markets?
Yeah.
What is that strategy? Because we're seeing stocks continuing to tumble.
Right. Yeah, and there's a number of different ways you can do that. You mentioned the word shorting. The big pros, the big money, the smart money uses these strategies. Shorting is one of them. You can short individual stocks. You can short the markets in general. And basically, it's just a way of selling something that you don't own and buying it back at a lower price to create a profit.
And that doesn't make a whole lot of sense to our listeners. And just to make it simple, it's just the opposite of buying low, selling high, or selling high and buying low. Think of this. Open your position high. You want it to go down. You close it low. There's a profit realized there.
Yeah, in these classes, we'll go into detail on how that works. It's a concept that most people just kind of shake their head and don't believe you can actually do, how you can sell something you don't own. We'll talk to you about that. We'll show you how that works. That's one way of participating in a down market. Another way is to use options. There's an option strategy that you
Yeah.
can use that will go up if the underlying, whatever you have that option contract on, it goes down. That options strategy goes up.
You
It's
mean the profit goes up
the
when that?
profit
Yep.
of the value of that option goes up,
Okay.
creating a profit for you. And that's one of the things that we talk about in these classes. It's like having an insurance policy on your portfolio.
Hmm.
There are exchange traded funds. I think more and more people are familiar with those. We call them ETFs, exchange traded funds. It's similar to a mutual fund in that it's a basket of stocks representing something in the market.
I don't think we want to put that in that category because mutual funds is kind of that swear word of the
Well,
financial
I'm kind of
markets.
getting to that point. There's a couple of differences that are
Yeah.
significant. There are high fees involved with mutual funds. You can't buy and sell a mutual fund during the day. You cannot protect a mutual fund. You can't have a stop loss on it. You can't use that option strategy I mentioned as protection, but you can with the exchange traded funds. Very, very small or low fees, almost non existent, and you can have protection there. But there are what we call inverse ETFs that go the opposite direction of what they're representing. For example, there is an ETF that represents the S&P 500. A lot of people might have heard people refer to the spiders. SPY is the symbol. That moves lockstep with the S&P 500. If the S&P's up 10%, it will be up 10% or close to that.
Close to it.
And there's an inverse, which means it goes the opposite direction. So let's say this year when the S&P 500 was down 20%, you had the potential with that inverse ETF to maybe be up 20%.
I believe one of them is the SH.
SH is a symbol. That is correct.
One of the
These
tickers.
are, but you don't want to just go out and start using these without understanding really what the specifics are. It's
Correct.
really they're really used as a short-term trading vehicle. We'll talk to you about that.
Yep.
So there's three ways you can participate in a down market. You can use the futures market, the foreign exchange market. You can sell contracts instead of buying. So you don't have to sit on the sideline. You don't have to be in the market and watch your assets dissipate or disappear in front of you. There are ways of benefiting. And if you're not taking advantage of a down market, in addition to an up market, and then we're going to throw in there a sideways market, you're missing out on maybe half or more of the opportunities during your lifetime. And think about it. If you are not participating or if you're losing half the time, what kind of an impact would that have on your portfolio over the course of 20 or 30 or 40 years?
Yeah, and that's where you have to understand how to identify that supply. So if an example of supply, if you have a whole bunch of sellers that are in the market, it's going to drive price down if there's less buyers. Just like anything in our everyday life, think of it as a say an auctioneer, and they have there's a selling a tractor, and if there's no buyers for that tractor, they're going to keep lowering that price, or we should say less buyers, which would be zero. The lowering that price until somebody wants to say there's 3 buyers. Now there's more demand for one supply, so price will go up, and we'll introduce you to these concepts and techniques in these investing classes, how to short the market, which means profiting in down markets. That's the strategy. So you can text right now for 2 seats for this class. Text the word investing to the number 210-210. That's for 2 seats and a quick start kit that will help you get started right away. And there's some techniques and terminology on the markets in that quick start kit. There's some free stock picks in there. So we have a lot of people that like these free stock picks. I mean, it's been a big hit for a lot of people that are coming into these investing classes. So you can see visually, because I think most people are visual learners on how supply and demand looks on a price chart. Text the word investing to the number 210-210 right now for your holiday gift of the financial quick start kit. So Al, you mentioned options and strategies to profit in down markets with those, but let's just say we have some listeners that want to generate some extra income. They have a job and they want to be able to have that second source or that second income strategy, but they work during the day. How do you help people find the right market or avenue to have strategies for income after their job, say at night or maybe even early in the morning?
Yeah, or after they retire. And I think more and more people now are realizing that the income that they have, especially with inflation and the way it has hit almost every aspect of our lives now, that maybe their job income isn't enough. And in recent studies, we see that And as much as 63% or more of the public lives paycheck to paycheck. So extra income would be extremely valuable to be able to maintain or increase your lifestyle. And unfortunately, Wall Street typically puts people into portfolios that do not really consider income, but there are assets, excuse me, there are assets that are used by the professionals, including people like Warren Buffett, that they really don't talk to you about, but they're ideal for short-term income. And think about it. If you need extra income, if you need extra cash for something, can you wait 10 or 20 or 30 years to get it for something you need to pay for today? Obviously not. So how do you do that with a short-term strategy? You use something like options or futures or Forex. Futures and Forex, getting back to your comment about how do you trade if you're working, they trade 24 hours a day. Uh, Futures closes for maybe 15 minutes, but essentially 24-hour trading. So you
So
can choose when you want to do that.
so what does that look like? Because I'm glad you said you can choose when you want to, but a lot of our listeners probably think you have to be glued to your computer screen to trade and invest, and that's
Yeah.
not how institutions do it, and that's
No.
not how we train our students how to trade
Yeah,
and
we
invest.
have
So
we have
explain
a
that.
we have a word for people that sit there all day long looking at their computers, and it's called a loser. And no
Well,
offense, folks, but
this is a family show, Al. Come
but
on, it's a holiday season.
what's the worst thing that you can rely on if you want to be a successful trader investor? It's your emotions. If you're a human being, you're born with emotions that are going to get in your way as if being successful. It's greed, it's fear, and those things are powerful and they're hard to overcome. And by the way, we have a strategy, a what we call core strategy, which is really designed to control those emotions. So if you're sitting in front of a computer watching something, pretty soon you're crossing your fingers, you're willing the price of something to go up or go down. And typically it's going to go the opposite direction of what you want it to do. You're going to get into something too soon, get into something too late, get out of it too soon, get out of it too late. If you have the right kind of education, it's going to help you identify the most important component of any trade or investment, and that's when to get out if you're wrong and when to get out if you're right. And those are, let's just keep it simple. That's really all you need to know. If you can identify the right price, the right entry price, if you're buying something, that will help you to manage your risk and make sure that any potential loss you have is a small one, which can then never become a big loss. But also, you want to make sure that you're taking advantage of all of the profit that is there. Unfortunately, most people get out too soon, leave a lot of profit, or they get out too late and let the profit be taken away from them. So get away from that computer. Learn how to set a trade based on price activity, based on what institutional buying and selling orders are showing us on a price chart. You can do that. You can set a trade with your risk management in place, so you know if you're wrong, it's a small loss, and with your profit target set realistically, so you know that if you're right, you're going to have your profit protected. Then just turn your computer off and go out and enjoy life because it goes by way too fast.
You're right, and I was actually thinking about it when you were talking there. I was having a conversation with some friends at the gym I go to, and they're talking about, well, how do you trade and not just watch your computer all day long and get all emotional? And I was trying to explain to them, well, you have to understand how to trade like the institutions, and then as you were talking about, use a price chart to make your financial decisions. So you're basing your decisions off of facts. And I mean, sometimes I want to say the words set and forget. I mean, some people out there don't like the word set and forget, but that's kind of how it is. You set your trade up ahead of time, and you walk away because you're protected on both ends. So there's nothing that you need to do once your trade is executed. And by the way, the computer, we actually have our own platform. The computer will actually execute the trade for you even when you're not at the computer. So that's where you place your trades. You let the price come to you. You let it buy for you. You let it sell for you, and you let it just work for you. And that's how you have your money work for you. And we introduce you to these concepts and techniques in these investing classes that we do here locally. And by the way, these are 2-hour classes. We've had a lot of people coming into these classes, especially these last, for a long time, but several weeks here, because we're seeing such great opportunities in the markets, and people want to take advantage of these. They want to see what's available, how do you use the market for income strategies, even the wealth strategies, 401k and IRA strategies? Because if you're in the market with a broker or advisor, you probably have a pretty sad portfolio this year.
Mhm.
And that's what we train and teach is how the market works, how it functions, and making smarter investing decisions in all your accounts. Text the word investing to the number 210 for 2 seats for a free investing class right here at our local academy. Text the word investing to the number 210 right now for 2 seats. Al, we're going to continue the discussion about supply and demand. We're going to elude that to more in a retirement account, 401ks and IRAs. Don't go away. We'll be right back. All right, I got to work with Joel here
Okay.
for maybe 10 minutes. I just
Okay.
got to get him
Great.
onboarded.